This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everyone. It is Thursday, September 11th, 2025, and this is the AgYield War Room. I am Jack Coakley, AgYield Marketing Manager, everyone's favorite backup host, and aspiring retirement home Frank Sinatra impersonator. Anyway, if you got any questions or comments today, please feel free. You guys want a little taste? Ready? Summer wind. All right, sorry, kidding. If you have any questions or comments, just feel free to join the discussion. We're always answering comments, questions, concerns at info@agyield.com. Let's shoot it over to Brian with some overnight numbers.
All right, thanks, Jack. D's corn overnight unchanged, 417. November beans up 6.5, 1031 3/4, and D Chicago wheat down 2 3/4 at 512 1/4. So I think a lot of volume still on the sidelines until we know what the report says tomorrow.
Thanks for that, Brian. Yeah, report tomorrow. We had some disappointing weekly export sales, as I'm being told. Justin, why don't you start with your thoughts before the big day, and we'll throw it around the room after.
Yeah, Jack. Sales were kind of on the lower end of all estimates for about every commodity. Corn, was only 540,000 total. Expectations were 900 to 2.3 million. Wheat was on the low end of expectations at 305. Beans were 541. So pretty disappointing. I think, corn, we'll take corn, for example. South Americans have been, Brazil especially has been shipping a ton of beans to China. We all know that. It looks like China's kind of front loading, trying to hold out from buying U.S. beans. They did buy a little bit this week. It looks like a spot purchase because they bought it and exported it this week at the same time. So pretty small there, but we did see China show up. But corn, the safrinha crop, they've been slow to export. On this flat price rally, looks like they're getting more competitive. So that's kind of my fear, at least on the corn demand side. It's been really, really good, record book that we have on for export right now. But that big safrinha crop's always kind of been sitting there looming, and I do think on rallies from here higher, we do really start cutting into demand. So to get the big numbers of demand that we do have written down, we have to stay at obviously competitive prices for an extended period of time to keep doing that kind of business. And maybe this is the first time we've seen, us kind of rally away from that business. So we'll see if that continues, but I would expect, Brazil to be aggressive. I mean, that's kind of what they're in the market for is exporting. So I think they're going to be aggressive as we go forward here.
Gotcha. Thanks for that, Justin. Dustin, I just realized you're in the office today. That's exciting. It looks like you're in conference room 2. So what do you got?
Not much. I think the image behind us could probably explain today. If you want to show the image, I talked about this in our nightly letter last night, and I think we discussed it a bit here, but the importance of 97.2 million acres this year, and what that means for rotation, natural rotation next year. This is it's a very busy chart, but this is basically the share of the combined corn and soybean acreage pie for the last 60 years. So we're on an uptrend, right? We've been slowly working in more and more bean acres over that 60 years. But what we're looking at in these big dips in orange is basically the year-over-year corn losses for the following year. So of those 6 years, beans gained on corn every time when we fell a certain percentage below that trend line. So this is a 6% below trend line, meaning basically we had too few bean acres that year, too many corn acres the year prior. We saw massive changes going into the next year. So to go see, I think a lot of people are still saying, well, what if we get another 95 million corn acres next year? I think you would have to have a pretty good price incentive for that to happen, right? It would be a very unnatural thing for that to happen, especially in a cost-cutting year. So that's been a lot of questions for our customer base. Like, should I start hedging new crop Nov 25, Nov 26 beans? There are some insurance products out there that we're starting to look at. Like, I'm not a big fan of margin protection or MCO necessarily as it relates to, like, there's a lot of moving parts to it. But then again, if you're thinking, I would really like to have a really high level of bean coverage next year, and you want to get that coverage on now, that price is being established now, that sales closing date is September 30th. So it is something to talk about. I think that if we have a reasonable bean price going into next year, which is like, 1070s right now, and we're worried about future of trade. China is obviously dribbling in some sales here today. There are some very unique ways to start forward thinking about risk, and it could be through insurance.
Gotcha. All good there. And whoever made that gorgeous movie poster behind you must be a marketing and graphic design genius. I mean, that is. So anyway, let's do the here nor there. Who else we got? Ben, what's on your mind this morning?
Yeah, just kind of jumping on the tail end of what Justin mentioned. We can't run away from export business. We have some pretty lofty projections in there. I think it's going to take something from the government, whether it's, expansion of ethanol, raising the blend wall a little bit, trade deals. We'll have a tremendous amount of corn to go through, whether the yield is 181 or 189. And, you look at a period of consolidation like this, we're going to move off the report. Discouraging that we came this far, got within 7 cents of the gap in December, and we're not able to fill it. Pure price wise, I think that if we could just mark time and trade sideways, it could be positive. But I really don't see that happening. I think that volume or the potential of being, 10 to 20 cents lower, and us talking about low river levels in a couple weeks is very possible. That being said, no one wants to market corn at 415 or 420 when it's well below the cost of production. So I think it's going to be tricky going back to a lot of those government safety nets. Hopefully there's a play on that, and we can do some business and keep the export part of it robust, because that only lends to some support a little bit later on down the line once we've kind of chewed through some bushels.
Yeah, I mean, so far it's, like corn, for example, it's held above the 50-day now like 3 or 4 times. So it'll be interesting to see if we can keep. So far, all the breaks have been bought. But until, my opinion is, until you get enough confidence in the crop size, there'll probably be buyers on the breaks here still. But I think we're starting to find the price where, you're kind of find that sweet spot where you're losing business on rallies, and you're on breaks. You're still, got people that need to cover. So it'll be interesting to see how we start getting some more yield results. So far, I've actually been surprised on the bean results that we've heard from people in some of the really dry areas, to the point where they can't really explain how good the yields are, and it hasn't rained hardly in the last 30 days. So I'm kind of scratching my head on that one. I talked to my brother. There's this Pioneer calls it their Z series. I'm sure there's different names for the new genetics. Kind of came out last year, and it kind of blew away all the other genetics. I'm curious if he seemed to think it was much more widespread this year. Kind of hard to get towards the end of the year, but that new genetic is 10 bushels better on average, at least from what we were seeing. So curious if there's some new genetics and beans that are causing some of these kind of surprising yields that we're hearing out of, especially the East Belt, where it's been, less than impressive to be conservative to the finish. So see if that's just the early beans that we're seeing that on, or if we keep seeing that trend.
Gotcha. Any other grain related topics, guys, before we shift over to livestock? Ryland, You know the drill. It's all you.
Yes, indeed. Well, it's kind of a weaker start yesterday, but prices did climb back, so we did make a new low for the move. Still seeing liquidation here in cattle markets, so I think a lot of that's probably funds not only rolling ahead but also reducing exposure here. The shorts are finally getting some reprieve as well, so maybe some of that's getting taken off the table. So overall, southern trade still hasn't developed in the cash side of things, but so far cash just has been leaking lower. We did see some dressed sales at 375, which have been 3 lower from previously this week. So and beef prices lower as well. You had choice down 203 down to 405.64, and select at 383.68 down 328. So we're still seeing this kind of weaker fundamental aspects right now really kind of dig into the pricing structure. So is it hard to say when this is going to stop, but I think this is the big fear kind of coming into this particular time of year where prices are kind of vulnerable. So right now, it seems like we're going to sit around that 40-day moving average trying to figure out what to do. Otherwise, we're kind of focusing more on the lower cash trade and would expect probably some continued liquidation. Feeder open interest was down another 2,200 contracts, and live cattle open interest was down almost 5,000. So these are pretty big numbers that we haven't seen on these last breaks. So it does feel like fundamentally something's changing. So I think these are big areas of support to kind of keep your eye on. And hogs, new contract highs in October, still kind of narrowing the discount a little bit, but it still seems like it's a cash-led rally. Cash was up $1.66, and demand holding on a lot better, I think, this week on the cash side of the market than one would expect. We're starting to see prices that typically you would see in the summertime, and they're holding up through the end of grilling season. So maybe that changes next week. Weekly export sales were nothing spectacular in either place, so it's hard to say that this has really been generated by non-domestic purchases. So overall, it just looks like hog market still seems pretty healthy right now with cash still on the upswing.
Got it. Thanks for that, Ryland. I appreciate it. I know I spend most of my time being an absolute circus clown on here, but I would be remiss not to talk about all the things we have to mourn today in America, whether that be the 24th anniversary of the 9/11 attacks, the assassination of Charlie Kirk, who was a father of I believe 2 under 3, and the school shooting happening in Colorado yesterday with, I believe, 3 dead. So our hearts go out to everyone affected and involved, and we hope and pray that there's a way to come together as a country. So I know that felt weird for me, and I'm sure it felt weird for you guys to watch me do that. But it's it's a sad thing. So anyway, thank you again for everyone that helps us support the show. If you like what you see here, you like being a part of the conversations, feel free to give us a like or subscribe. It doesn't cost you anything to do so, and it helps us out with the YouTube algorithms, gets our show out to a larger audience. So thanks again for everyone that helps out and supports us. We're doing this every day the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate everyone's thoughts and comments. Dan will be back tomorrow. And we'll have an additional show tomorrow as well. WASDE Report reactions at 11:15 Central Time. So be sure to tune in for that and hear everyone's thoughts. Everyone have a great day, and we'll speak to you guys again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.